Greetings, everyone. The whole of this week I've been kind busy, but I'm here to explain what happened yesterday. Yesterday we had NFP, which was on the US dollar. First of all, the forecast, meaning the top analysts, journalists, and all these financial institutions, they expected the US economy to create 65,000 jobs. 65,000. That's what was expected. But guess what? It shocked everyone. The economy created 178,000 jobs. What does that signal? Number one, that shows a stronger economy. Basing on this data, that shows a stronger economy. Any economy that creates more jobs, it's a stronger economy. But on the other side, when more people are having jobs, what does it mean? It means more people will have money to purchase stuffs. When we look at the US, when a person gets a job, what does it mean? It means this person will try now to get a mortgage, getting a house, meaning every salary they are receiving, a certain percentage is chopped off to pay for that house. So it means that is a stronger economy, meaning the housing industry or the housing sector is going to get more people, more clients, which boosts the manufacturing, which boosts the construction industry and all that. But on the other side, it means more people will be able to afford things, to buy grocery, to not even to get cars. Because in the US, when someone gets a job, they want to get a car. And they don't pay the car cash. They get the car, then they will pay monthly until they finish the car. So it means the companies that are selling cars are going to make more money. And the government taxes them. So it means the economy is going to benefit, honestly. So what do you expect from that? You expect a stronger dollar, a stronger US dollar. Then on the other side, what does it signal? What signal does it send to? Number one, the banks. Number two, the hedge funds. Number three, the traders in the world. Now, even the people who buy into the bonds. What does that say to them? That the central bank will have to find a solution for this inflation. Countries don't want inflation. Inflation is whereby there's a lot of money in the public. People are having money. So meaning they can purchase stuffs and all that heavily. So the central bank normally handles this by increasing the interest rates. When it increases the interest rates, people are attracted into investing in the bond market because the interest rates are exciting, they're interesting. So that pulls away money from the public. So if it signals that the central bank will handle this by increasing the interest rates, what does it mean for even people outside the US to put more money into the US bond, to put more money into the dollar? A very, very strong dollar. We are looking at a very strong dollar. Let's look, because this data comes out at 3:30. So I tell traders, you don't need to panic. Let's go to the charts. Let's go to the charts. I missed making these videos because, I love when people know really what is going on, and when people know what to do. And because like yesterday, if you have been following all my lessons, that's why it is very important. If you are a trader out there and you are trading and you're not using fundamentals in your trading, I beg you, stop right now. Stop right now. Why? Because you are gambling. Come, I train you how to analyze fundamentals, macroeconomics, combine them with the strategy that I use, you will hardly go below 70% on your win rate. Hardly. And I'm talking about 70% judging from your monthly performance. So let's look at this. Let's look at yesterday, Friday, 3:30. We are going. Indeed, when that data was released, remember it was released at 3:30, and we realized that the US economy has created more jobs. You don't rush to enter at that time. No. Are you seeing this candle? Let me first even mark it. I show you, because I want you to clearly see how things really happen. Why don't I just shift to, let me shift to a 5 minute. Let's look at 5 minute. When that data was released, we had this candle. You see, this is the candle that moves up and down. So traders who trade this, they normally lose money because market goes up and down. For us, we don't panic. No. You look at 3:30. Okay, this is when the data is released. Then you don't even need to rush. The market is down here. You expect the market is going to sell. Why? Because of the data. Which pair are we looking at? We are looking at Euro USD. And you're looking at a stronger dollar, meaning the market is going to push down on Euro USD. We wait for the market to do one thing. Recorrect, push up again into, even if it is a 50% of this candle. Let me even on this, let me even try to use a Fibonacci. You mark this candle. You know, trading is so sweet when you have information. Me, I'm telling you. We wait for the market to, not even, let's look at this. Let's mark it at, we put at here. We say, okay, let's wait for the market to recorrect back into this zone. So if it recorrects back into this zone, you would have entered like this. I'm now showing you a hack. Don't say I'm greedy. I'm not showing you how to indeed trade these events. You entered from there and you did something like this. You entered from around there. You don't need to enter the tip. No, just here. Market goes against you for just a minute. I want you to see. You don't need even to look at much. 3R is enough, by the way. You risk $10 and you're picking $30. You're good. You're not bad. You're good to go. The person who did 3.2R, they hit their TP and they are out smoothly. Let's look at the reaction of even other pairs. Let's look at gold. Let's look at USD card. This will be the last one because baby. Let's mark. Okay, don't need to go this route. This news event found when the market was already buying. Yeah, the dollar had already its power. So let's now go to 5-minute chart. We see. Look at it. The news happened. This was the candle moving up, and what? You wait for the market to recorrect back a little bit. You enter from these levels. Let me even draw the levels again because I'm trying to make sure that you clearly see the practical side of trading these news events. This is the candle. You wait for the market to correct back into these levels. You entered from there. Where is my sorry, the corner, baby. Okay, you entered from these levels. You put your stop loss here. Let's see how the market reacted. See how the market goes up. Your goal is to pick a 3R and you're out. You picked your 3R, a small 3, and you're out. On 2 pairs, 3